What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on global management company Booz Allen Hamilton, symbol BAH. And when we take a look at the chart, we're simply going to be assessing two things. One, what is the direction of the trend? And two, are there clues as to where the big money might be patiently waiting to buy at lower prices or patiently waiting to sell at higher prices? So let's get right into it. Now, assessing the trend is actually quite simple. We're simply going to be looking for the two most recent highs and the two most recent lows. So from high to low, low to high, high to low, we'll notice that as they move from left to right, the highs are moving higher, and as they move from left to right, the lows are also moving higher, and that's the definition of an uptrend. So just last week, BAH entered into an uptrend. And when we enter an uptrend, we're only going to be looking for support levels for either a quick bounce trade or a lower entry price if you're looking for a longer term position. So let's go see if we can find some support levels here on BAH. So I'm going to zoom in a little bit, and there is a support level that we can identify. First support level right here in the 110.67 to 108.47 price range. There's another support level just below that, 105.23 to 103.30, and another support level below that in the 101.32 to 99 price range. So three support levels. Let's go see if we can find a resistance level now. There's a resistance level. This is actually looking quite promising already. There's a resistance level all the way up here. That's our first major technical resistance level at 127.94. So when I say promising because if you consider the point risk from the top part of that green shaded area to the bottom, or just below the bottom green shaded area, I'm actually going to show you where you would place your protective stop. You would simply place your protective stop just below that green shaded area, that red dashed line. So your entry could be anywhere in that green shaded area, and you'd be looking for a quick bounce and a target just in front of 127.94. Now, if you wanted to be more conservative on your entry, you could consider the middle support level, and that would be an entry in that green shaded area, the protective stop at that red dash line. Or if you wanted to wait even more patiently to see if you could get an entry if price would pull back to where this major swing low was at the 101.32 price point, you could place an entry somewhere in that green shaded area, and your protective stop would be just below there. So we've got three support levels to consider for an entry point for if you're looking for either a quick bounce trade or, once again, a longer term position. Now, one thing I'm going to consider here is if you want to get more aggressive, you go for the upper one. If you want to be more conservative, you go for the lower one. If you want the Goldilocks zone, the not too hot, not too cold, split the difference, that would be the middle zone. Now, the risk of the top zone is we blow right through it and bounce off one of the other two levels. The risk of the lower entries was maybe it bounces off an upper level and you don't get filled. So there's different levels of risk to consider for each one of these support levels. And that's even if you want to do this trade. But I really like this trade setup for a few different reasons other than those support levels. I don't need to do a whole lot more, but I'm going to just quickly show you where price is relative to where we were just late last year. So we are 80 points below where we were just last year. So on a value perspective, this is not a value exercise here. This is not fundamental analysis. But it's a relatively cheap price relative to where Booz Allen Hamilton was trading just last year. So one final consideration for entry that's giving me more conviction about this upper level would be this. So if you look at the point, so we broke out into an uptrend. We had a low, we had a high, we had a higher low. Our next higher high that confirmed the uptrend was this candle right here. So that's the breakout point. Let me draw a new, for visual sake, this blue dash line here, right here, that's the breakout point. That's where the uptrend started. And frequently, when the uptrend starts, you'll get a pullback and retest of that breakout point, which it actually did on late Friday. Okay, so ideally, we get another opportunity for a pullback to somewhere at that breakout point. And this upper support level is really hovering right at that breakout point. So that gives me even greater conviction for that entry. So that's going to be the trade setup that I do for this video. Okay. That's once again, that's not the only trade setup that you could consider. All three of those are going to have very favorable reward to risk, but this top one's going to have plenty of reward to risk and right at the breakout point. Okay. So if you wanted to go for the aggressive entry, the upper support level, place a buy limit order at 110.67, protective stop at the red dashed line just below that green shaded area, drag your target to just in front of that major resistance level, and that trade setup right there has a 6.78 to 1 reward to risk ratio. What that means is for every $100 worth of risk you would take, you would have almost $700 worth of reward potential. So if you were to enter there and it go to your target, you could screw up the next 6 trades and still be break even. That's why a high reward to risk ratio is very important. So you want to think about that before you place any trade. That's the way I look at every trade now. And that one has a very favorable reward to risk. And so that's the trade that I would want to go for. Okay. So ideally, if that's the trade setup that you would want to choose, ideally the trade would play out something like this. You get a pullback sometime early next week to 110.67 or somewhere in that green shaded area to bounce off that support level and start working our way higher and go retest that major resistance level. Okay. And that movement in that white space there, since there is very little technical resistance, that could happen quickly, but it really doesn't matter. I'd be patient. I could wait patiently to get to make $700 for every $100 worth of risk I would take. Okay, so let's wrap up today's session, folks. That's a pretty attractive looking trade setup relative to the past trade setups that I've done. I'll be back each day this week for more technical analysis. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.